Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Another Teaching Tech Tuesday. Let's talk about contra trend trading, something that I don't talk about a lot on this channel, mainly because I think it creates bad habits for people. It's nice to have a strategy for all seasons, right? You have a long trend strategy, you have a short trend strategy, you have a contra trend strategy, you have a range trade strategy, you have a low volatility strategy, whatever. It's nice to have that in your toolkit. But I think a lot of people psychologically think like, okay, I need to be trading. I have to be doing something. So if I'm not going with the trend, I'm going against the trend. It also feeds into people's biases a lot because they think, oh, this thing has to go down. The market has to be wrong here. And it just sets them up for failure most of the time because most people aren't very good at being disciplined about stop losses or using stop losses. So then stuff just goes against you and you end up losing a lot of money when you should just either be doing nothing or just be trading with the trend. So to be clear, it's longs and bearish territory, basically where we are now with crypto, shorts and bullish territory, where you would have been in, let's say, November 2024, right? That would have been a terrible idea because price went up significantly in November 2024. But with proper risk management, you can take any trade wherever you want. It doesn't really matter. It's more about making more on winners than you're losing on losers, right? It doesn't really matter what the hit rate is. Typically what you want from this style of trading is you want something that's outstretched from reality, either overbought, oversold, something in the extremes that has a risk reward profile that you can actually trade. If it's just this wishy-washy, well, I think this is going to go down because the sun is traveling around the earth, right? Like stuff like that doesn't really make any sense. Unless you can backtest that, great, right? If you can backtest solar eclipses and lunar eclipses and that's your strategy and that's where you take your contra trend trades, perfect, fine. I prefer technicals personally, but whatever works, right? So you're looking for a mean reversion setup, essentially. This is back to Dow theory, you can look that up. And for the cloud specifically, it is prices that are very far away from the Kijun. The farther the better, that gives you a higher reward potential based on the extreme. And importantly, continuation is not the expectation. I would not expect to be in these type of trades for a high period of time. Typically you go from bullish to neutral to bearish. And in between that, you have this trend reversal stage where you have the opportunity to continue holding like BTC above 91, right? If we see that in Q2. But generally, if you're trying to pick lows like this or pick highs, you're probably trading it to 50% or some safer mean reversion level. And you're not DCAing, you're not sticking around, you're not becoming a community member. Again, this is another reason why I don't talk about this a lot, because for most people in crypto, a trade then becomes a high conviction play, then they become an investor and a community member, and then 5 years later, you're holding on to Zcash, right? Like that's not where you want to be. So the safest play is the bounce. The trend flip typically happens later. And for the best risk reward, you're looking for something that is crowded. And again, you're looking for extremes. We'll take a look at funding and oscillators specifically in the current environment as things to watch for. And you can always enter these as early as you want, right? You can say, okay, I think today's the low. Put the stop loss at new lower lows and be done with it. And you can continue doing that until you are correct. It'll pay off so long as there actually is a mean reversion. You know, I'm thinking of the ETH BTC chart, which we'll take a look at, which hasn't had a mean reversion really at all, right? It's just straight down. So any long trades there have just been obliterated continuously, and that's the risk. How many times do you meet failure conditions and continue to trade that? Or how long do you wait, right? This is the jump rope double dutch thing. Are we waiting a little longer to get a slightly worse risk reward, or waiting for horizontals to break in our direction first so that we have more confidence and can size it higher? Or are we just entering early and then adding, right? It's completely up to the individual. But in my experience, it's better to be a little later. It's better to have a little more evidence. Being early is nice, but it doesn't always pay. Like I said already, stop loss typically local low or new high, whatever type of trade you're in. And you can, of course, use Williams fractals for this if you want some sort of systematic way to look at these. But for something that's down 80% in 2 months, like alts were, then you could just say, okay, you know, we started to bottom out. Maybe this isn't the low, but I'll put a stop loss at new lows and call it a day. And you don't want to become a community member, like I already said. You need to go into these trades with the mindset of, okay, this is the The outcome I'm looking for is this. I don't care about anything else. If this isn't a successful trade, I'm out. I don't care about some white paper that got released about ZK snarks, or I don't care about some L2 blah, blah, blah. I don't care about RWAs. It's not about that, because most of the time, nothing else matters. That's the reality. Utility for a lot of this stuff hasn't mattered, at least in crypto land. And I'll talk about a specific instance where you probably don't want to contra trade something that looks like this. We'll talk about figs at the end. You probably want to sit in that for a high period of time and just wait. That is not necessarily what I would consider a contra trend trade. That's more of like a DCA, ultra long term type of idea. As far as the crowdedness, we can also look at the commitment of traders data, which I talked about last week. You can watch that video. But we can look at things specifically in crypto, fear and greed. It's a sentiment gauge. We can say, okay, is 20 a correct score here relative to where it was just a couple months ago at 20? 20 here seems a bit extreme relative to the 22s and 30s we were in September 2024. And of course, we go back here in 2022, we get into single digit territory. We're probably not going to see that. COVID as well, single digits, 2018, low double digits and single digits. So to me, it feels a little bit overdone. That's of course subjective, but it's one way to measure this loosely. On the legacy side, they have this uncertainty index, which you can also look at and look up. This is economic policy uncertainty. And because of the tariffs, is there really more uncertainty than 9/11? Probably not. GFC 2008, probably not. And I think I've even seen some of these graphs show some of the uncertainty now higher than COVID even. So that seems a little outstretched. So there is crowdedness even in legacy. That isn't to say we're going to see another 20% return year. This is just about a lower time frame mean reversion trade. For funding, we can also look at aggregate funding for Bitcoin or wherever. And what we want to see always is negative funding. Negative funding is rare and means generally that there's a crowdedness in the short side. I like to see this on a daily time frame. Even recently, there's been several days where funding has been mostly negative. And you can see throughout time, April 2024 is a great example. We can go negative, bounce, and still end up going lower, right? So all the more reason why if you're trading on a lower time frame like this, it's probably best not to be a hero and just take the mean reversion setup, the mean reversion play, and then wait for trend confirmation after that. But I wouldn't go into it with the expectation that, okay, I picked the bottom, this is it, this is the one. It could be, right? But you have no idea. MSTR is another great example. Great looking setup that has played out well, but you really have no idea. Bitcoin Magazine Pro has the Bitcoin side, but if you go to Coinalyze, they have all of the data and it'll show similar data here for BTC. By all of the data, I just mean other tokens we can look at. Solana specifically is what I'm interested in here. What does this funding look like? Is it negative? Is it negative for multiple days? It has predicted funding in negative territory, so I like that, but currently it is positive. Sorry, that's on the hourly. Let's go daily here. Daily funding, you can see where it was in 2024. That's come way off. We've had more negative days here in 2025 than we have had in a while, and predicted funding here is negative. Currently, funding is basically flat, but it is teetering on negative. So if we're looking for crowdedness, this is what crowded long looks like. And for crypto specifically, I wouldn't call this crowded, but this is a reset of sentiment completely. If we back this out, we'll see how much data they have in the bear market. You know, this is what crowded short looks like, right? This was FTX blowing up, and it's off the scale as far as funding is concerned. It's hard to maintain that just based on math and based on what people are paying for these trades. But even before we broke out in Q4 2023, funding was mostly negative. And if you'll remember at that time, we had this inverted head and shoulders setup that I know we talked about on this channel. So this is like a 10 out of 10 as far as the setup is concerned. You have a chart pattern, you have funding, it's been bearish forever, it's been in the dumps, right? We're not quite there on Solana here, but it's good to see funding reset. I would much rather see funding look like this, basically flat to slightly negative, when I'm trying to take a mean reversion setup play rather than funding that looks like this, right? This means you're probably a little late to the game if the funding looks like this. And again, if you'll remember on this channel at that time, I was talking about a head and shoulders setup up here, which eventually played out. I had some people telling me it was a falling wedge or whatever, and that wasn't the case, right? So there are many instances where you will see supporting evidence for what you see in price on funding. I don't talk about it a lot, but it is an interesting little piece of data to pay attention to. If we're on the 9th inning of a move, you're going to see funding that's just way out of whack with reality, right? As far as the cloud stuff's concerned, I've talked about this a lot with the Kijun bounce videos, so I'll leave this in the description of this video as well as a refresher for those who are interested. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to our trading style. You can check out Kraken Pro at the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to US and US territory customers by Payward Ventures Inc., PBI, DBA, Kraken. So when don't you want a contra trend trade? Well, if we have clear momentum in one direction, and there's no question about it. I see a lot of people, November's a great example, who are shorting every leg up. Okay, that's not what you want to do. That's probably not going to be profitable over time. That's a quick way to the poorhouse, just as we saw people longing on the way down from 92 to 90 to 87 to 85, whatever. You don't always have to be doing something. When you're not sure, cash is an option. But at this point, we've had a bull div on a lot of stuff on the daily. You got a lower low here, a higher low in RSI. RSI also, by the way, hit oversold territory sub 30. Now that doesn't always typically mark a bottom per se, but it's good to see all of this momentum washed out. You've certainly erased any bearish divergences we may have had up here, right? So it's going to be harder for this to keep going lower without resetting a little bit. So you do have that on your side. For Bitcoin specifically, the mean reversion setup, you didn't really get much of anything because it kind of just chopped around sideways on the daily, right? It's most of the time it was pretty tight to the TK lines here, and it didn't get as oversold as it did when it was overbought in November, December. But another thing you can do, the Tenkan on the daily is essentially similar to the 4-hour cloud itself. In case you weren't sure, everything's talking to each other, but the Tenkan on the daily is the 4-hour cloud, basically. So when you're seeing a breach here on the 4-hour, you're seeing a breach on the daily Tenkan. One thing you can always do is say, okay, I know this is bearish territory on the daily, but what does it look like on the 4-hour? Again, this creates bad habits for people because they think I got to be trading, I got to be looking at all these time frames, and generally not the best thing to do. But when you're fairly sure momentum has gone at least flat, then I like the 4-hour a lot for the cloud, 2060, 12030 for those settings. And we've finally started to see bullishness here on the cloud after multiple weeks being bearish. That's a really good sign. If you're looking for evidence to do something, we've talked about this head and shoulders thing a few times. Maybe this is enough, maybe not, unsure. As confidence goes down, so does sizing. But we are still in bearish territory. So what is the expectation here? The realistic expectation is probably somewhere here, which is below the breakdown at around 94 and near the previous local highs. I mean, that's it, right? So if we can't get a good stop loss or handle on what to expect here, probably not a great trade. If we pull out the handy dandy long calculator, let's say we like a long here, what would our target be? Maybe somewhere in the middle of that. In this specific example, probably a stop loss at the cloud itself, which would be 85.8. The R&R is pretty good. It's a decent setup. Do I have ultra high confidence here? Not really. Not really. If we go to something like Sol on the daily, or any meme coin on the daily, this thing extremely oversold, and you keep hearing me say over the past couple weeks, I want to wait, I want to wait, I want to wait. I want to wait for this Tenkan close. We got that yesterday. We got a breach of a horizontal here on a lower time frame. This would be the level to watch, and you'll notice that's basically the Kijun on the daily. You can see the distance here, that it is away from that level. And using cloud and price, you basically set up the trade for you. There's really no thinking here. This is the level, your stop loss, probably not break even on the horizontal. It's probably some low time frame local low, and that would bring you to somewhere at 136 or less. Again, very subjective, very dependent on confidence, sizing. If you're on higher leverage and you're getting liquidated at 140, this probably isn't the setup for you. But this is what I would want on a trade like this, is something at least basically a 25% move from here. Unlike BTC, this isn't quite yet fully bullish on the 4 hour, but it's getting there, it's trying. It's been very bearish for weeks. So do I think Solana is going to replace the Swift network and become the next RWA network? And you're right, no, we're not talking about any of that. All we're talking about is let's just get to 183, right? That's the important part here for this specific trade and setup. It is still miles away from being bullish on the daily, but this is the mean reversion setup you were looking for. And it's also nice that this is the breakdown level, basically, where we had this huge head and shoulders that even I didn't believe would actually break as low as it did, right? That's the measured move of that head and shoulders. And we got there. We got there. We just did an all-time high, 300, and over 50% off. So these are the type of setups on something that has momentum and attention that makes sense to me. If we go down this list, like to the bottom, and we go to something like Filecoin, which would be in the FIGS example category, where is there really anybody watching this? Probably not. Does anybody care about this thing right now? Probably not. At least Solana is getting headlines and people are talking about it, right? Now we can look at funding. We can look at all this other stuff. RSI hit below 30. We got a bull div on this. It's above the daily Tenkin. Great. It's probably above the 4 hour. Great. But I think you need to level set expectations. And if it's something on page 56 of the market cap list, maybe it's not going to perform how you expect it to. And this is another trap people get into. They say, okay, there's all these trades on these high cap coins. Awesome. I'm going to trade everything that is super low cap and make it all back in one trade. Another very bad habit to get into. Could you take the same trades here that you took on Solana? Absolutely. But the reality is they probably don't work out as well compared to Solana, or at all compared to some of this higher market cap stuff. And if we look at Filecoin, it is just stuck in this huge range. So what would the trade here be relative to the trend? Well, the trend is nothing. There is no trend. It's flat. The real trade here is a range trade from this level to 743. Where people, again, get into trouble is they buy these lows, assuming that the horizontal at 8 is going to break and it's going to go back to 80. So you have to be careful with that mentality. Not above the weekly yet. This had a great setup and it hasn't gone anywhere, right? It just hasn't gone anywhere. So you really have to know what you're trading and what you're getting into. Does it have momentum? Does it have a history of momentum? Is it in a sector that people care about or not? Especially if we're trying to contra trend trade something where there really isn't a trend. And I'll talk about FIGS just because it's in the same vein. You know, if you're bullish Filecoin and it's at all-time lows, fine. I don't hate that idea, but it's not really a trade at that point. It's a multi-month journey, hopefully, to somewhere above 8, probably closer to 15 to 20. You can't go into something like FIGS thinking, okay, I picked the bottom, I sniped the bottom, this is it, this is the one, it's contra trend, it's a falling wedge. This does not have a history ever of doing well, first of all. RSI on the weekly still above 40. The pattern looks real, but where do you want to trade this based on the pattern? It's at the break of the pattern. And then also the cloud. Now, could this be an M&A target? Could this go bankrupt? Like, everything is possible, but that's probably going to take time. And this has never been bullish, ever. So on high time frames, it's a mess. On the daily, it's a mess. And this would not be something I would be looking to trade from a contra trend perspective. Now, Zoom was similar. And the difference there is on the daily, guess what? It broke a diagonal. It broke the cloud. Put this, I guess it is on log, and it kept going. So yes, you were contra trend trading this on the weekly. You got into the cloud. Similar idea, similar setup, but you really do not want to trap yourself into this slow bleed. And we can pull up ETH BTC because I know people have tried to contra trend trade this the entire time, including myself, where I took a stab somewhere up here. But there really has not been a mean reversion at any point that's worth much of anything. So things like Figs or Zoom, you probably need to have a little more patience with, and that includes things like ETHBTC. If it's going to take longer, you're probably sizing that down. You're probably not paying attention to it. You're probably not using leverage. If this is a multi-cycle idea where you think ETH is going to overtake whatever because of whatever, okay, but that's not really what we're talking about here. You know, there isn't as of yet been an amazing setup that has actually worked out. Currently, what you could do is you could say, okay, here's their stop loss. Here is the key June. And if we use the calculator here, you can say, okay, it's a pretty tight stop loss, decent risk reward. It's a trade setup. We can measure it all out, put an order on the book and whatnot. But in reality, is this really going to work out? We'll see, right? That's part of the game. But my confidence in this is 0. So my sizing in this would be 0. We also did this with Bonk. This is currently an active trade that I'm in on some dust here I have on this test account. But same idea, right? At any point, you could have said, this is the bottom, this is the bottom. I know this is the bottom. I think this is the bottom. Okay, this is definitely the bottom, with the exact same setup. Stop loss, new lows, great. Take profit somewhere at a horizontal that makes sense. We had talked about a chart pattern, which ETHBTC doesn't really have down here. Some sort of bottoming process that ETHBTC doesn't have. But if you ask me today, what's my level? Probably the current level, but we could also say the key June. Why not, right? Let's just move it up. We'll confirm the edits here on the $500 position, whatever it is. And that's not unreasonable. But this is not me thinking, man, Bonk is going to be crazy bullish for the next 6 months. This is just quick in and out, like using the public restroom, right? So that's all I got for this one. I hope it was helpful. Give me a like, dislike, comment, share, subscribe, and happy trading.